Now, we are all watching the news, and the news can be great because it gives us information in real time. That's awesome. But the downside to that is a lot of the news does not communicate a whole lot of context or information on how it exactly applies to us. There's so many different political spins on almost anything that's out there. So what does it really mean to you when the Fed cuts rates? When we hear that the Federal Reserve cut rates, that means that our government is doing something to help our economy during turbulent times, like the turbulent times we're in the middle of now. So when this news broke that the Fed cut rates to 0%, I was getting countless direct messages and people mentioning me in some of their comments asking, hey Grant, when can I get my 0% rate? Well, the truth is you can't. Here's something that you have to understand. We can't go get a loan from the Federal Reserve. Like, you can't show up to the Federal Reserve's door and apply for a loan or even deposit money in a savings account. Where can you do that? Well, with a bank. When the Fed cuts rates, they're actually cutting rates on short-term loans that they give to banks. Now, banks have more money readily available to them at a cheaper rate, and as a result, banks can then lend money to us as consumers at potentially cheaper rates. Now, banks are for-profit institutions, so they're always going to mark up the interest rate that they get from the Federal Reserve before they give it to us. And on top of that, there's certain risks that are involved with each individual and with each different loan type. So they're going to mark up those loans according to the risk as well. So an example might be this: the Federal Reserve lends at 0% to the banks. The banks want to make a, say, 1% profit, and the risk based on the loan you're asking for, let's say, is a 2% risk, so there's another 2% added. Well, 0 plus 1 plus 2 might end up being a 3% rate. Now, that's just an example. It's not an exact equation of how every loan works out, but hopefully it gives you an idea of how the Fed cutting rates can trickle down to you. Now, you've heard me mention that when the Fed cuts rates to banks, they're cutting rates on short-term loans that they're giving to banks, which means the loans that we will experience potentially having a lower rate on will also be short-term loans. These are things like car loans or credit cards or other lines of credit. This is not for mortgages. Look, we'll make another video about this, but mortgages essentially are not controlled by those short-term loans Federal Reserve. They're controlled by bonds in the mortgage-backed securities market. I know that sounds complicated, but stay tuned for another video about how mortgage rates are controlled. So how does this apply to you? You hear the Fed cuts rates, now what should you do? Well, this means that the short-term loans available at your bank might be lower. So if you currently have a short-term loan, like an auto loan or credit card or other line of credit, you might want to reach out to them and ask, hey, can I refinance or transition these loans? Any short-term loan that you may have a couple of weeks after the announcement is a good time to reach out to your bank to see if you can transition your current short-term loans to loans that have a lower rate. So if all this does is give relief on short-term loans, why would the Fed cut rates? Bottom line here is that it makes more money available at a cheaper rate. And for our economy, when there's more money available at a lower price, then people are going to buy more. And when people are buying more, it helps our economy. It creates more jobs, it helps the stock market, it does so many other things. So when our economy is in trouble, the government's going to try and do things that make more money available, so we spend more money. Because when we spend more money, our economy grows. So in summary, what does it mean when you heard that the Fed cuts rates to 0%? One, you have to understand that you're not going to get a rate of 0% because the Fed doesn't loan money to you. The Fed loans money to banks. But it does mean that you could get some short-term loans at lower rates. And the third point that we really have to make sure we understand is that when the Fed cuts rates, it has nothing to do with mortgages. It has nothing to do with long-term loans. So you're not getting a 0% rate, and you sure as heck aren't getting a 0% rate on a mortgage. So hopefully we've made sense of this whole Fed cutting rate conversation. There's so many people out there who really don't know what it means and how it applies to them. If you found this video helpful, share this. Especially now during these turbulent economic times, people want to know what this stuff really means. It can help and add value. So would you share this video with somebody? And another thing, if you want to be one of those people who is sending me questions directly and asking things about finances, go ahead and follow me on Instagram. My handle is @GrantBotma. You can direct message me there, or you can just watch my stories that I'm putting out there on a daily basis, where I'm educating people on what's going on in the current financial market and educating people on what they can do with their own personal finances.